Hello and welcome to our live session today with Fedros. So, what's up in the FX market?
Well, the euro has been moving in an upwards trajectory in addition to the British pound moving up and the Aussie. Now, one could attribute the rise of the euro to the fact that the ECB is anticipated to increase their interest rates by 25 basis points during their monetary policy meeting due this week. Now, the pound may be up despite comments by BOE's man yesterday that the bank may be reaching its terminal rate in terms of easing inflationary pressures. However, following today's releases of the unemployment rate coming in lower than expected and the employment change coming in higher than expected, it provided some support for the pound. Hence, the British pound is currently in an upwards trajectory. Now, the Aussie has been continuing its upward trajectory, which could be attributed also to, in part, a dollar weakness. So, given that the Fed Funds futures anticipate that the FOMC during its meeting tomorrow will remain on pause, implies a weakening of the greenback, hence allowing the Aussie to continue its upward trajectory. Now, the dollar against the yen, however, is moving in a sideways fashion. The yen has found some support given that the Tokyo's stock exchange index, TOPIX, is trading at levels last seen in 1990. So given this, it may be that the Japanese yen is strengthening overall. However, we could also attribute the sideways motion to, in part, the potential for the dollar giving an upset, given, well, in today's American session where the CPI rates are due, where should the CPI rates come in higher than expected, then we may see the case for the bank remaining on hold being diminished. So a higher CPI rate would imply persistent inflationary pressures in the economy, hence a case for a 25 basis point hike. Whereas, should they come in lower than expected or as anticipated, we may see the greenback weakening, which is why the JPY may be moving in a sideways fashion. So, the dollar against the Turkish lira was moving in an upward trajectory, but it appears to have halted in its tracks. Now, despite halting and the Bollinger Bands narrowing, we would anticipate that the Turkish lira will continue to depreciate against the dollar. Why? Well, it appears that the Turkish Central Bank is not moving away from its unorthodox economic policy anytime soon. Hence, despite finding a ceiling of some sort, we would anticipate the dollar to gain against the Turkish lira. And lastly, the dollar against the loonie has been moving in a downward trajectory. Once again, the weakening of the dollar has allowed the loonie to take advantage of a weakening greenback, hence gaining for the Canadian dollar.
And how has gold's price been reacting?
Gold's price has moved slightly lower. However, it's currently moving in a sideways fashion. So when we say slightly lower, over the past few days, the gold appears to have moved slightly lower, yet maintained a level of some sort, and is moving in a sideways fashion until the CPI rates. Well, we anticipate that the CPI rates may have an impact on gold's price, where once again, a weakening greenback would allow gold to take advantage of a weaker dollar, hence gaining in price. Yet, should the CPI rate come in hotter than expected, then we may see gold weakening due to the greenback strengthening, once again highlighting their inverse relationship.
How about US stock markets?
Well, the US stock markets are all up. Same story as before. Weakening greenback makes US stocks cheaper for overseas investors to buy, hence the S&P 500, the Nasdaq 100, and the Dow Jones 30 are moving in an upwards trajectory. However, it may not be attributed all to the greenback expecting to weaken. It may be that we're seeing that this AI hype is continuing and is running its course. It's moving up and it's bringing the entire sector up together. However, the S&P 500 and the Dow Jones 30 may be in part higher, not because of the AI, as that affects the Nasdaq predominantly, but due to a weakening greenback.
How about oil prices?
Oil prices have been down. Now, there's a fear of a reduction in demand, which has been continuing for the past week or so. given that there's fears of major economies entering a recession, which means lower demand for oil, in turn, results to lower oil prices. Now, it should also be noted that Reuters released an exclusive report earlier today in which it said that Pakistan was buying Russian oil in the Chinese yuan, which may be indicating of a bypassing of international sanctions, in essence saying that Russia may continue exporting large amounts of oil into the market, hence pushing oil prices down, combined with fears of a recession, may push oil prices even lower.
And what's in today's calendar?
Well, in today's calendar, we note Germany's ZEW economic sentiment and the current conditions, both for this month, for June, which are anticipated to both weaken the euro, coming in lower than expected. We note from the Eurozone that ECB board member Enria is expected to speak, and the highlight of the day is the US CPI rates, which, as said before, are anticipated to decrease, so which will weaken the US dollar. However, we also note that following the CPI rates, BOE Governor Andrew Bailey is expected to speak, whose comments, should they reiterate those of BOE's man, may weaken the pound. However, most of the emphasis today will be on the CPI rates. And during tomorrow's Asian session, we note New Zealand's current account for quarter one, which is anticipated to improve, hence supporting the New Zealand dollar.
Thank you, Fedros. Stay tuned for our next live session with Fedros.
Hello, everybody, and welcome to another live technical analysis. So we're starting off with the dollar against the Japanese yen. As we mentioned before, it's moving in a slightly sideways fashion, despite coming in lower 3 days ago. It's stopping its upwards trajectory at R1. So currently, with the RSI figure running along the figure of 50, I would not be surprised should the pair continue moving in a sideways fashion between S1 and R1. However, we should also note that there is a upwards trend line forming, a bit narrow, yet nonetheless an upwards trend line. However, we also have a downwards moving trend line. So, should it break above R1, we may see the pair moving further and testing resistance at R2 at 140.75. However, with the narrowing of the Bollinger Bands, it may imply a sideways motion. And yet, as we said in our fundamentals, the US CPI, the US CPI rates, which are due today, may have a substantial impact on the price of the dollar overall. So we maintain a neutral outlook up until the release of the US CPI rates, where should they show signs of lowering inflationary pressures, we may see the yen gaining on a weaker greenback. So let's move on to the euro dollar. As you can see, it's testing resistance beautifully at 1.08050, validating our upwards moving trend line since the 6th of June. So, as we noted before, failing to break above, yet broke above, reached 70, failing to break below 50, and is now moving towards 70 once again, implying a bullish sentiment within the market. In addition to the ECB expected to hike interest rates by 25 basis points during their interest rate decision this week, we may see the euro gaining on a weaker greenback and, due to higher interest rates, breaking above R1 and perhaps moving to test resistance at R2. Whereas, should CPI come in higher than expected, with the dollar gaining. I would not be surprised should it break below S1. However, should the ECB continue to hike, it may stay between S1 and S2. Now, what is also important to note is the bouncing of the RSI indicator here. Bouncing and bouncing once again. So bullish outlook for the euro against the dollar. Now, the pound, as we said, was moving lower, as you can see here yesterday, in anticipation of perhaps the bank remaining on pause or perhaps a more dovish forward guidance. However, following the release of the employment data today, we see that the pound is strengthening as a case is made for another interest rate hike by the bank. So just note right here on the RSI indicator, the slight breaking below 50, yet the immediate bouncing above. So despite breaking below our upwards moving trend line, we anticipate the pair to continue in an upwards trajectory. So that's our previous trend line. We could also form a new one. So as of now, my current trend line would be from the 5th of June, moving higher, a market correction lower, and is now moving once again higher with the target of R1 in its sights. Now, should it break above R1, we may see a break above R2. So for a bullish outlook, we would like to see the break above R1. If it fails to break above R1, then we may see the pair continue in a sort of sideways moving fashion or even turn bearish, breaking below S1 with the next possible target being S2 at 1.2465. So maintaining a bullish outlook for the pair as we're anticipating the dollar to weaken and employment data for the UK coming in better than expected. So long on the pound. As you can see, we had noted that should it break below, we may not see it moving to test support at S1, yet move higher. As you can see, it touched the mid-range of the Bollinger Bands and moved higher, breaking above R1. So R1 will now be S1. So resistance now turns support, having broken above. And as you can see, touched. So if you go back to last week's technical analysis, where we had set these levels, you can see that it is validated once again. So this becomes S1, switching from a red to green. So bringing it lower, S1 now becomes S2. S2 becomes S3. And we're going to place our resistance R3 together. We've been having a trend, a habit of simply switching support and resistance lines, which validates on a constant basis our hypotheses. So before moving to test, to find R3, we're going to be switching R2 to R1, R3 to R2. So this becomes R2. Also, we're noting the formation of a new upwards moving trend line. So let's go find R3. So as we said, we prefer the bodies of the candles. So this right here is a nice this is a nice resistance level for me. So I could either place it here, taking in this into account, yet this for me might be slightly better. There's more touches. There's the bodies of the candles, and beautifully before a bearish candle with a move lower. So this for me may imply a substantial level of resistance, which may be validated, which is at 0.6970. Yet 69773. I'd rather have it at 7.3 than at 7.0, as it would remain here, whereas 7.0 would bring slightly lower. So as you can see, touching, we will see if this is validated in the future. And let's calculate the distance between R2 and R3. 90 pips, good enough. 90 pips is a valid distance between a support and a resistance level. Well, resistance with resistance or support with resistance, any way you'd like to say it. It is still validated. So as you can see, it's moving to test resistance at R1. So for a bullish outlook to continue, it needs to break above R1. Should it fail to break above R1, we would move into a sideways bias, whereas should it break below S1, we would move into a bearish bias. Now, RSI is failing to break above 70, but is still at 70, implying a bullish sentiment. So we maintain a bullish outlook for the pair as long as it continues to validate our upwards moving trend line. However, it would not be surprising if it moved to correct to the lower end of the Bollinger Bands at S1 and moved higher once again. So once again, even if it does break our upwards moving trend line, that does not mean we're switching to a bearish outlook. In fact, for a bearish outlook, we need it to break our resistance now turn support at 0.6690. Dollar CAD is moving in a downward trajectory. As you can see, our support and resistance levels, it broke below support, it acted as support, is acting again on support, and you can see our S2 nicely acting as support. Just look at the bullish and bearish candle touching precisely our S2, which validates our support and resistance lines, yet having broken below S1 now makes this support turned resistance. So this will become R1. Once again, we're simply switching our support and resistance lines, which is validating our hypothesis on numerous charts. So R1, excuse me, becomes R2. R2 becomes R3. Now, note that the narrowing of the Bollinger Bands may imply it could move in a sideways fashion between S1 and S1 and R1. Narrowing is going to be bringing, if it moves slightly lower, the Bollinger Band may be brought directly to resistance 1. As we can see, the lower end is touching nicely on S2, which is now S1. So this becomes S1, this becomes S2. We're just switching it up. And we remove, you can keep R3 at this point, well, prior R3 as a reference point for the future. And now let's go find support for S3. So this at first glance might be a valid support. 36 pips, slightly narrow, could easily be broken. Yet it would not coincide with RS2, so it needs to be lower. Let's move back. So as you can see, S1, S2, and the next level might be at perhaps 1. Personally, I'll bring it right around here. As you can see, there's price action moving, breaking, supporting once again in the mid-range, perhaps here. So support 3 will be moved to 1.3135. So this will become S3. let's just fix our chart. R1, R2, and R3, S1, S2, S3. Now we could also see the formation of a downwards moving trend line beginning on the 6th of June. So personally, I would maintain a bearish outlook for the dollar against the loonie. Why? Broken below support, now turn resistance, formation of a downward trend line. As you can see, the Bollinger Bands may be narrowing, yet failing to break above 50 might imply a bearish sentiment remaining within the market. So for a bearish outlook, break below S1 and a move towards S2, whereas for a bullish outlook, break above R1 and a move towards R2. Gold. As you can see, gold may have found some support at resistance, now turn support. And if we extend these channels, it coincides perfectly. You can see it's found support and resistance. Temporary market corrections below, nonetheless, yet still moves within the channel. So this was, if I'm not mistaken, support turn resistance, which is now resistance turn support. So once again, we're just simply switching. This becomes S1. However, despite it appearing to move in an upwards fashion, if the CPI result once again comes in higher than expected, we may see gold weakening due to a stronger greenback, whereas should it come in as expected, which is lower, then we may see gold capitalizing on a weaker greenback, hence moving higher, potentially testing R1 at 1,975, with the next target for the bulls being the 2002 level, which would also coincide with a breaking above the 2000 key psychological level. So S2 becomes S3. We're going to keep our prior S3 line for future reference, and we bring resistance at 2030. So this would be my R3. You can see we've just extended our sideways moving channel. So it could support the theory that it may move in a sideways fashion up until the US CPI rates, which may heavily impact the market. So perhaps moving in a sideways fashion up until 3:30 GMT plus 2, which is when the US CPI rates are released. So until then, I would not be surprised if it stays between these two bounds. Whereas once the CPI rates come in, it may move in either direction, breaking below or above R1 or S1, and that would also coincide with a bullish or a bearish outlook for the precious metal. So we're just going to keep our S3 here for future reference. As you can see, however, it broke below the reading of 50 as we had noted. Market correction lower. However, moved higher and is staying between the sideways moving channel, incepted on the 18th of May. So we extended our sideways moving channel that was up to here. As you can see, it's validated again and again and again. So we're just going to keep our sideways moving channel. Now, as you can see, they're all on the up and up. We're on the Dow Jones 30, breaking above R1, found support at R1, moving towards R2. So we maintain a bullish outlook for the Dow Jones 30. However, an upwards moving trend line may be very steep. So if it does break, no surprise there. However, note that it's moving in a sideways fashion upwards for 70, implying a bullish market sentiment, as anticipation of the dollar weakening may allow foreign investors to buy more, and it's moving in an upwards fashion. Now, as you can see here, we had prior support and resistance levels beautifully touching on R1, resistance turned support. As you can see, it's moving upwards to R2. Also note that the upwards moving trend line is validated nearly to the pip. So this becomes resistance turned support. Which seems to be the theme of most of our technical analysis. Fair enough. It's validating our theories. So moving to S2. Once again, I'm going to keep S3 for future reference. Comes R2. Now this becomes R1. So for R3, this is where I bring my R3. Yet we also have to validate our hypothesis. 3,000, 35,000, mistaken, 80, 35,380. S3 becomes R3. Switch since we have a new S3. Yet before we move on, we need to check yes. Prior resistance turn support. Validated once again. So this for me would be a valid resistance level. So we're keeping S3, S2, S1, R1, R2, and R3. Once again, breaking above our sideways moving channel and breaking above R1 beautifully here. One touch and a second touch, and then resistance now turns support. So once again, resistance turns support. S1 now becomes S2. S2 now becomes S3, and then we're keeping once again S3 for future reference. R2 becomes R1, and R3 becomes R2. Maintain a bullish outlook for the S&P 500, so long as it validates our upward trend line and fails to break below S1. Aiming for resistance at the 4,400 mark. RSI figure as well is above 70, implying a bullish sentiment within the market. And then R3 is perhaps too close for comfort. Prior peak before a move downwards. So 4,510 would be my R3. Although it may still be slightly too narrow. Let's just remove S3. Despite saying we'll keep it, makes this chart much easier to read. To 50. Seeing our chart. support now turn resistance. So we maintain a bullish outlook for the S&P 500. So this now becomes R3, 4,510. Once again, resistance turns support, moving in an upwards fashion. Yet I'd rather see oil. As you can see, breaking below S1, S1, S2, S3. We hold a bearish outlook for oil as long as it does not break above S3, which is now R1. However, I would personally like to look at Intel. So Intel has been flying, I'd say, sort of under the radar, and the ticker for our Intel is hashtag INTC. Just here we go. This may be harder for people to see, so let's just fix this color scheme, black on white. So just an upwards moving trend line for the pair. It's a bit painful on the eyes, I'm aware. Yet we can bring R1 for Intel at $33.03. Well, 5 cents. Just move these out the way. Yes, this is time consuming. However, let's just move on to the chart. Green, bull candle green. There we go. And then yes, or down ren, bull, and the bear candle needs to be red. Much better. So 33.05 for support at 1 for S1. Let's move the grid and the time period separators. Much nicer. So Intel becomes resistance at 33.05, R1 at 33.05. S1 at 33.35. So we were on the 1 hour. Let's move on to the 4-hour chart. Still validated. So my S2 would be brought. So you can see there's large moves being made. So I'd keep S3 at $29.80. And then perhaps I would bring S3 at $28.45. So S2 $29.80. $20.45. That would be S3. Now, why are we looking at Intel? Well, there's reports linking them to the purchase of ARM, the British uh, chip designer. Well, they're not going to be purchasing them. They want to be an anchor investor, which means they buy a substantial amount of shares pre-IPO. Hence, when ARM does decide to launch in the New York Stock Exchange, so their IPO, and why the New York Stock Exchange and not the London Stock Exchange? Well, according to them, the New York Stock Exchange offers more offers and is more friendly rather than the UK industry, which coincides with the shift away from the London Stock Exchange for companies looking to list, well, going public essentially. So this is validated, and Intel is looking to buy, well, being an anchor investor, to be precise, which may facilitate Intel's upwards momentum given the current AI hype, in addition to perhaps increasing long term value for the company. So I would personally be bullish on Intel. So that would be my R2. And then for R3, 3615. So this would be my R3. This one is 2. So we maintain a bullish outlook for NVIDIA, given that it is moving in an upwards fashion. And the Bollinger Bands, period 20. So we've got the Bollinger Bands added as well. Upper end, market correction slightly lower, perhaps. Wide, implying high market volatility. And the RSI index, 370, and we would like the 50 as the midpoint. So as you can see from the RSI indicator, move above 50, moving towards 70, implying a bullish sentiment within the market. Such maintain a bullish outlook for Intel, which is one to watch, given the current hype going around. And lastly, Turkish lira. It's pretty difficult to show the magnitude, but if you could just go on the daily, it's just huge, enormous. So breaking above R1, finding resistance at R1 2320. However, we could even say that it's finding resistance at 2365. Yet, given that there is an unwillingness, this needs to be slightly higher, 2370. Given that there is an unwillingness by the Turkish Central Bank to move away from their unorthodox economic policies, we may see the dollar gaining on the Turkish lira. So 2450 for R3, decent increment. Yet we maintain a bullish outlook for the pair. And for R1, resistance turns support, but this could easily be broken. S1 becomes S2. And S2 becomes S3. R2 is not R2. R2 is R1. And then we may place R3 at 25.50 dollar increment as well. Now it's very wide. Y could easily break below S1 and move towards S2, or break below R1 and move towards R2. It is very volatile. Yet appears to have found some sort of a ceiling at R1. So it would be very difficult to move higher. Well, for us, to form an upwards moving trend line. Hence, we do not draw a trend line, yet we maintain a bullish outlook running along the figure of 70, applying a strong bullish sentiment. And that's it for today. Thank you very much, and until next time.
Hello everybody, and welcome to another one of our great videos. Today we'll be looking at how to practice discipline in trading. Discipline is a necessary and important part of any trading strategy. Without discipline, a solid trading system and proper risk management lose their value. Self-discipline involves developing a mental framework which enables you to stay motivated and focused. You should have a target or goal in the mind, as this is the first step towards developing self-discipline. Discipline can be mastered, and all you need is willpower. This involves carefully studying the markets, and especially the markets you're trading. In order to acquire discipline, you must practice patience and be able to control common emotional impulses like fear and greed. Proper discipline involves having and sticking to a trading plan. Create a schedule for your trading. Know what signals will make you enter or exit a trade. You create trading rules to get you out of trouble when positions go badly. If you don't follow the rules, you've lost your discipline and allowing for even greater losses. Ensure that you apply proper risk management by sticking to your stop loss and take profit orders. If you stick to the rules, you will discover that discipline is necessary for success. Thank you for watching.
All right. Okay, let's give it a moment for the others to join first before we begin. Let's wait for others to join first. Okay, let's give it a minute. All right, guys, let's give it a minute while we wait for the others to join first before we begin. Okay, just doing a mic test and video test. Can you guys hear me and see me? Because I'm actually using a new setup from home. It's a new video setup. It's a new microphone setup. So just wondering if you guys can hear me. Hey, hi there, Amit. Hi there, Steph. Okay, just letting you guys know in case you guys, want to contact me after while we are waiting for the others to join. Okay, let me get this up. Okay, in case you want to contact me after this webinar, want to message me, you guys have any more questions, you can actually contact me via this link. I'll just send it to the chat. You guys can check it out. I've just sent the link to the chat already. Can open it up, take a look at it, and also that's about me. Okay, so also just want to let you guys know there's actually, if you guys want to find out more about webinars like this, you can head on to IronFX website, and then you can head on to Forex webinars. So it's under IronFX School, under webinars. Okay, so you guys can actually scroll down, can actually register for the education. Okay, not sure why my face isn't up here yet. Okay, yeah, my face is not up here yet. Well, it's fine. Okay, next. So we actually have the IronFX VIP room. So please join the room. So I actually will send the link to the chat. You guys can actually deposit money. So once you guys deposit money into the accounts, you guys can actually have free premium services. So for bronze, deposit at least $250, silver at least $1,000, and gold at least $2,000, and you can ask for analysis requests from us. Prop traders, indicator requests from us, platinum at least $5,000, diamond at least $15,000. So yeah, just head on here to register this website and then log into client portal, select VIP room, make sure your balance meets the minimum required. So in the room, you can actually have a one-on-one session with us, Jean, this entire group of us. You can talk to Cassandra, Desmond, Jean, Annabelle, Jianing, and myself. You guys can ask us questions directly there. So we are always there on the channel from Monday to Friday. All right. Okay, let me just close it out. Okay. Topic for today will be on the Fibonacci series, 2 out of 4 Fibonacci extensions. Okay. So let me just begin this slideshow. Okay, my name is actually Chen Yongxing. I'm actually the trade analyst for Everest Fortune Group. Hey, hi there, Charles. Just saw you coming in. So I'm actually the trade analyst for Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So right now we actually have a very, very special collaboration with IronFX, where we are bringing you guys the good stuff, teaching you guys the education that you guys need for your trading needs. So a few topics just to cover for today. We'll be going through the ideal market structure, different Fib retracement levels, Fibonacci extensions. We'll be focusing more on that today. Fibonacci extension, which are Fib levels that are above 100%, which are the Fibonacci extensions. And how do we combine Fibonacci retracements for our trading? Hey, hi there, Fo. Hi there. Okay, so first topic we are going through is the ideal market structure. So in ideal market structure, you guys can actually look at this chart first. You can actually look at this animation first. This is actually a wrong way of drawing a Fibonacci line. So let me just go to the chart to show you guys. Okay, maybe I'll just use the euro dollar chart on the 1 hour charts. Okay, I'll just clear things out. Okay, so this is actually very, very insignificant. This is actually not clean. The way you're drawing a Fibonacci line, you can actually find the Fibonacci from the top left-hand corner, 1, 2, 3. So it's called the Fib retracement. You actually scroll down, it's called the Fib retracement is the first option. So a fib retracement, you want something that's very, very clean, where you want to draw it cleanly. So you draw from the top, bottom to the top. So you want to have a significant swing to the highest points. So what is going on? You want the trend line. You can actually see this dotted trend line. It has to be relatively close together along the Fibonacci trend line. Then it's a clean and valid trend line. But what is not valid? If you actually draw a Fibonacci line like that, so let's say I draw it like that. Because as you, okay, I'm not sure why this keep disconnecting. Okay, so if you actually draw from the bottom to the top, but then you notice that the Fibonacci actually deviates very, very far away from this trend line right here. This trend line to the top, it deviates quite far away before it still deviates quite far away. It's not even close to the Fibonacci line before it continues heading up. So this is actually not a clean setup. This is not the way you should be drawing. So what you should be doing is, if you actually draw a fib from the bottom to the top, this is one single. You can actually treat this as a one single Fibonacci drawing, because price went up, respecting that trend line, came back down, tapped within the 78.6% Fibonacci line before price continues moving upwards. So I'm just showing you guys the difference between drawing a clean and unclean Fibonacci points. So next, using a Fibonacci swings the right way. So please take a look at this short little clip. So the swing highs and lows need to be very, very significant before you can start drawing your Fibonacci line. So, so another reason for using the Fibonacci line is because many algorithms actually use Fibonacci for their trading. So it's actually robots, expert indicators. They rely a lot on the Fibonacci line to actually trade. So you can actually expect. So let me just show you guys an example. You guys can actually expect the, okay, maybe I should draw from here to here, because this is a significant swing low to the significant swing high. You'll notice that algorithms, or should I say the 61.8% golden Fibonacci line, usually price comes back down and reacts off very, very strongly on it. You can actually take the 61.8% Fibonacci line as a potential take profit area. Potential take profit area, or if you are looking for longs. So let's say, looking at this overall time frame, it's very, very bullish. Price just continue going up. What you can do is, you can wait for price to tap into the 61.8% Fibonacci retracement line before you move down. Zoom in at this area to the 5 minutes, 15 minutes, or even the 1 minute time frame for your entries. So potential better entries right there. So that's how you can pull Fibonacci in within your trading. So next, moving on to following the market structure. So we got to follow the market structure. Just now I show you guys the trend line cannot cut through the Fibonacci trend line. So you take a look at this video, price actually cut through it. So it's not clean and it's the wrong way of drawing. So let's watch it one more time before I show you guys an example. Okay, done. Okay, let's take a look. Let me find one more that it's not valid. So maybe move on to the 15 minutes time frame. So let's see. Okay, let me find one. Okay, let's say if you actually want to draw a Fibonacci line from this significant swing high to this significant swing low. If you actually draw the fib from the top to the bottom, is this valid? Well, to answer your question, it's not a valid trend line, because like the video, like the example that I just showed you just now, price actually went through and cuts through the entire Fibonacci trend line before it moves down towards the significant swing low. So this is not a valid way, and it's a totally a wrong way of drawing your Fibonacci line. So what you want to actually do is you can actually draw the Fibonacci line from here, the top to the bottom. So you notice that price actually comes down to this from the top to the bottoms and then continues. Moving back up, retraces back up to the 78.6% Fibonacci line before it continues back down. So just for display purposes, just to show you guys cleanly, I'll just edit this to 78.6%. So notice price just went down, went up, tapping that area. So this is considered one Fibonacci movement. So you can start to draw the next one. Price goes down to the significant swing low. So there's another way you can draw it. So price continues going down. Okay, not sure why it keeps disconnecting. Okay. All Fips. Okay. Next, let me find another one. Let me get back to the question. Following the market structure, I've shown you guys a clean one already. I'll just disconnect that. Let me find a clean market structure for you guys to follow. Want something that's very clean. So maybe I can follow this. This might be pretty clean. It's not that clean. It actually deviates quite a bit far away. So you actually went up. So this is not clean. I wouldn't take it as a clean trend line, as a clean Fibonacci drawing. So let me find another one. So this is actually very, very clean. If you draw from the top to the bottom, you notice that price is more or less very, very close along the Fibonacci trend line. So please screenshot this down, this setting right here. This is my personal settings. This is the Fibonacci settings. So it's when I double click it, it's under style. Please take photo of it. You guys can actually copy it out. These are the settings that I'm actually using for trading. All right. So once you guys have taken photo of this, let me move down. So these are the next settings that I'm actually currently using. Same thing, please screenshot this down and apply it to your trading view. Oh yes, by the way, talking about trading view, let me get this thing out. Okay. So if you guys actually want to, sign up for TradingView, want to upgrade to the premium account or even the pro accounts. So I'm not a spokesperson for TradingView, but I actually find that using the premium, the upgraded TradingView plans, especially the pro plans, which I'm personally using on my personal TradingView accounts. What I like is I can actually use more than 2 indicators. So on pro accounts, you can actually use 5 indicators, 2 charts in one layout, 20 active server-side alerts, which are very, very important to me. Because using the alerts, I can actually not monitor my chart so often. I set an alert, I go and relax, I come back only when price hits my points of interest. And most importantly, it's actually ad-free. So you actually won't see all the advertisements popping up. So I just send the link to the chat. You guys can actually use my referral link to sign up. All right, let us continue. So back to the topic on Fibonacci series. So next, the different Fibonacci retracement levels. Okay. So yeah, by the way, if you guys have any questions so far, feel free to ask in the chat. I will try my very best to answer you. So if I'm going too fast or if I'm going too slow, if there are any things that you guys do not understand, do let me know. Also, please try to implement the Fibonacci, using the Fibonacci retracements for your trading. It actually helped me a lot. Last time I did not use Fibonacci retracement for my trading. I did not know where price can potentially head to. I did not understand the concept of Fibonacci lines. So just now, as I mentioned, drawing from the significance, swing low to the swing high, you actually notice that price actually came back down to this 61.8%. So if you are looking for sales, let's say you are selling, you can actually take profit at this area just in case price bounces all the way back up to your entry. So use that as a potential target point. Hey, hi there, Charles. Hi there, Phoebe. Hi there, Francis. Hi there, Jana. So you guys coming in. All right, next, just having a quick look. Let me find another clean Fibonacci line setup. So this is actually quite clean. Quite clean. Price actually follows accordingly along the trend line, moving upwards. So that's another way that you can actually draw it. So let me find the 127.2%. Okay, so later we'll get right into that. Hey, hi there. Hello, man. Hello. So today we'll be talking about just a quick recap for those who are new here, who just came in. I'm actually going to talk a lot about the Fibonacci extension lines today and how you can implement it into your trading. So it's numbers above the 100% fit, which is the 127.2% and the 161.8% Fibonacci line. Wait, let me get this out. We are mainly focused on this 127.2% and 161.8%. Okay, next, moving on. Ideal market structure, I'll show you guys already. Fibonacci extension. Okay, we'll not be going through that because I'm sure many of you guys are new traders. So if I actually show you guys the Nike tick today, it might actually confuse you guys. So there's actually a trading method called the Nike tick. So you can actually take a look, price. Okay, take a look at this video again. So this is why it's called the Nike tick. It looks like a tick. Draw from the starting points to the end points. And you watch out for the 127.2% area and the 161.8% area. So price actually taps into that area and reverses back down towards the previous overlap support. So that could be a potential trade setup you can actually take a look at. I'll show you guys an example. Hopefully I can find an example. So let's see. So we are looking at the 127.2%. You actually notice that price actually reversed back up. So right now we actually want to look for a potential setup that we can take. So if we actually use a Fibonacci projection line, I'll just show you guys today just an example. I'll not expect you guys to understand or use this method by the end of this session. But actually, you can actually use the Fibonacci extension line. Let me find it. Trend-based Fib extension. It's 1, 2, 3. Trend-based Fib extension from the top to bottom and to the next swing. So you are swinging from here, here, and here. So that's how you draw it. You notice that the 78.6% Fibonacci projection line and the 127.2% Fibonacci projection line are kind of intersecting together. You can actually draw a box. Take a look very, very nicely. So in order not to miss your entry, you can actually have a 1 pip entry above. So instead of 1.08344, you enter at 1.08354. So it looks more or less like a sniper entry. 354. You snipe your entry, stop loss at the. Let me get this out. 127.138. Okay. Let me clear it out. Make it clean for you guys. Stop loss below the 141.4% Fibonacci line, and then you aim for price to hit back up towards the previous overlap resistance. Let me get this line out. Resistance line only. Notice that price actually, if we move on to the smaller time frame, price actually went very, very nicely, tapped into our entry, and reversed back up immediately. So this is actually a one-to-one setup, a one-to-one trading setup that you guys can actually take a look at. So yeah, very, very nicely one-to-one trading setup right there. So I'll just screenshot this down and send it to chat so you guys can take a look at it. One-to-one setup right there. Copy link to the chart image, I'll send it to the chat. So that's an example of a reverse Nike tick. So let me show you guys another Nike tick. Instead of buying, you guys will be selling back down. So let me try to find an example for that. Right, give me a moment. Let me find it. So this is quite a clean setup. It didn't hit. It's nowhere close towards the 127.2. I'm looking for price to be potentially close to that. So let me find a setup for it. Okay, potentially we can take a look at it. Look at this. Okay, this might be a setup. Okay, off it. Okay, this is not clean, it's nowhere close. Well, let me find another one. So this setup is actually quite rare, especially on the larger time frame. So it might actually take some time to find it. Let me find it again. Okay, so if price actually, so reverse Nike tick. Price coming back down. Okay, this is quite a nice setup. This is a reverse Nike tick. Price actually hit up and reverse back down. So let me show you guys how I found it. So if you actually draw a Fibonacci projection line from the bottom of the swing low to the top and back down to that, so you can actually see 1, 2, 3. So it's pretty much quite a nice Nike tick right there. So we are looking at the 78.6% Fibonacci line. So I'll just draw that area out. Next, you can actually draw a Fibonacci line, Fibonacci retracement line from the top to the bottom. You notice that the 78.6%. I'll just highlight it out for you guys. So you notice that is 78.6% Fibonacci projection line and the 127.2% Fibonacci extension line are intersecting with each other. So you can actually take a short position right there. Take a short. Your take profit will be at the previous swing high right there. So it actually turned into a support level. So that could be a potential trade that you can actually take a look. So for the stop loss instead, actually I noticed that the 141.4% has been hit. You actually notice that your stop loss would have been hit. But actually, if you play around actually through some back tests, we actually notice that the Nike tick setup also works if you set your stop loss to the 148%. 148%. Slightly higher, 148%. It's still a more than 1-to-1 risk to reward trade. So it's actually a 1.32 risk to reward trade. You can actually type it a safer entry, 148% stop loss, where you set your stop loss. So that could be a trade setup. So let me just screenshot it down for you guys to take a look. Copy link chart image. Can take your time to actually look at the forex charts, your market, find potential setups. Okay, next. Nike tick setup, you actually notice starting points, reversal. So this is actually a way of reversal trading. Okay, combining fib extensions with retracement. Just now I showed you guys already. The Fibonacci lines are intersecting together. That is why we have added confluence to. That's why we have increased confidence for the trade setup right there. Okay, so let me show you guys how I personally trade. I actually use Fibonacci lines a lot for my trading. So if you actually take a look right here, let me find a trade setup. Okay, let me find a potential trade setup. So 61.8%. I always wait for price to retrace back down towards the 61.8% area before I move towards the 1 minute time frame and search for potential entries. So for me, I actually use smart money concepts. I use that a lot for my trading. So the way I actually look at the trade setup is price goes down, hits back up, goes down, goes up, goes down, hits down before it breaks structure before moving higher and higher. So you notice that where is the market structure shift? How it works is a market structure shift is when price forms a higher high before moving higher and higher. So this is our market structure shift right there. You notice that price actually broke the high before retracing back down and moving higher. So this is my 61.8% points of interest. So just take it as this, my 61.8% POI is how I wait for my trade to happen. So in this particular scenario, it's the same thing also. The 61.8% Fibonacci retracement line is right there. So what I do is I wait for price to head back down before we have a market structure shift right here. You notice that price actually broke this high right there. Okay, let me find this. Okay. Price broke structure. I'll just write this out as simply as possible. Price actually broke structure right there before we. Okay, let me put this down. Let me just redraw it out. How I look at it. Okay, so it's the same thing, price book structure. So you can actually start to look for a retracement by entry. So the moment price break structure, my first entry can potentially be either so on the 1 minute time frame, this is the previous significant swing low. So I'll draw it all the way up to the high where the high was. So if you notice that price taps into I'm always looking for the 38% area for my entry or the 61.8% area for my entry. So in this particular scenario, price actually came down very, very close towards the 38.2% and Fibonacci retracement, but actually did not activate. So as price continues moving higher, I'll continue moving my Fibonacci line higher and higher, and then potentially I can enter my trade at the 38.2% area. Price actually came up, went back down towards my 38.2% area. That is where my entry would have been. So just let me draw it out. Have an entry right here, 38.2%. Stop loss right below all the way down to that previous swing low. And then I aim all the way up to the next point of interest, all the way up in the charts. But the issue with this, how can I refine my entry? So although I say that 38.2% would be a potential entry, so it would be a hit or miss entry. My better entry I would like is preferably the 61.8%, but apparently price did not retrace back down towards that area. So usually what I'll look for is at least the 50% area. Why the 50% area? Because 50% retracements is usually the discounted zone. So you take it as above here. Anything above right here, if you are buying, it's the premium zone. Anything below that, it's the discounted zone. So we always want discounts, especially when we are buying things in real life. So this could be a potential buy entry right there. Buy entry, continue, waiting for price to continue moving up. So it also looks like a sniper entry right there. Stop loss below, so you would have reduced your risk by roughly an estimated, okay, in this particular case, reduced by about 8 pips. Not the best, but it's better, right? Okay, so let me just move on. Okay, I'll just screenshot this down and I'll send it to the chat. So this is how I personally trade for my trading setups. I'll label it out how I personally trade. Okay. So a potential take profit target, this is where we will be using the Fibonacci extension lines. So anything above 0% is actually, the minus 0.272 and minus 61.8% Fibonacci line. So these are called expansions, which are negative. So let's see in this particular scenario, we can actually use it as potential take profit targets. Okay, let me turn on the lights. I think it's getting a bit dark. Okay. So with our first take profit target, okay, let me clear this out, 5 minutes. Okay. We can actually aim for the negative 27.2% Fibonacci line for our first take profit target, which also is in line with the previous swing high. So it coordinates very, very nicely. We are adding confluence to why we are taking profit right there. So you can either take partial profit right there, and then your final take profit can potentially be at the negative 61.8% Fibonacci line. Final take profits. So at the partial, when you take partial profits, you can close. So this is just a suggestion. This is not a trade advice. Potentially close. So I write potentially close 80% of your trade. And you leave the rest to run. So the final take profit is the remaining 20% of whatever you didn't close. So this is how you can personally manage your trade just by using the Fibonacci expansions and extensions. So I'll just delete all this out. All right. Okay, I'll screenshot this down. I'll send it to chat. So I'll label it as how you can use Fibonacci expansion lines for potential take profit targets. Okay. Next. Let me find another setup where I can make use of the Fibonacci extension or expansion lines. Okay, well, maybe in this particular setup, okay, it's not the best setup because I do not like this so-called support. Okay, so since you guys are actually using classic support and resistance, most traders are, I'll just use it then. So maybe we can actually take this area as a potential. Okay, let me just draw it out, maybe on the 1 minute time frame. Okay, I do apologize if I'm dragging the screen a bit too much. Okay. So let's draw our first support area first. So we have a very, very nice support drawn out. Very, very nice. Price draws in. We are drawing the best fit lines. So we actually have 3 tabs. Pretty much this is a valid support area. So very, very nice support. Price came down, tapped right into that again. So what I'm looking for, same thing, I'm looking for a market structure shift. So even a minor high. So let's say price goes down, even a minor high like this gets broken. I also take that into account. So without this, how I take a look at it. So this is also a when price broke structure right there. So once price broke structure, I'll start looking for, as I mentioned, either the 38.2% or the 50% Fibonacci retracements. So I'll draw from the bottom to the top. So in this particular scenario, price actually tapped into the 38.2%. So why I usually talk about 38.2%? Because it's nearly an unmissable area. You nearly can't miss the trade if you actually enter at the 38.2%. So with our entry in place at the 38.2%, stop loss below the previous significant swing low, you start to aim for the, okay, let me just screenshot first before we continue. This another setup. Okay, I'll screenshot this down, send it to chat first. Okay, I'll show you guys how to use the expansion. So it's the negative 27.2% and the negative 61.8%. So you can actually notice that let's see whether the 61.8% target has been hit. Okay, price actually tapped very, very nicely before it reversed back down. So same thing. Let me get the lines out. Do I have the lines? No. Okay, never mind. Same thing. This could be your potential first take profit target, first TP target. Next, it's your final take profit target. So I'll set this as the final TP target. You notice price taps very, very nicely into the negative 61.8% before it automatically reverses all the way back down. So yeah, I'll just screenshot this down and I'll send it to chat. So for this particular trade setup, it's actually a 1 to 1.61 risk to reward. So I'll copy it into a chart image, I'll send it to you guys. So this another how you can use another example. I'll just type it out. Another example of implementing negative 61.8% Fibonacci expansion. So I'll just bold this word expansion line. Hey, no problem, man. Juha Kiwi. So you actually scroll through the chats. I actually have sent a few setups, just how to use the Fibonacci lines, Fibonacci expansion, Fibonacci extensions. Hey, no problem, man. Okay. So next, let me take a look at another trade setup. So we have to go through a very, very intensive practice session. So you guys can more or less see how to use it properly. So same thing as I drawn, price is very, very close within the Fibonacci trend line. All right, next, let's find another setup. So I'll just find another trade setup where we can aim for. Okay. All right. It's quite a nice one. In this particular scenario, price actually went up. We actually have quite a nice resistance right here. quite a nice resistance. So I'm actually drawing the best fit line. So maybe this is not the best, but yeah, best fit resistance. Extended box rate. This is not the best resistance line, but more or less you guys get it. Price tap, failed to break before, continue going back down. So let's see how we could have potentially entered this nice setup and potentially look for take profit targets. So same thing, I'm looking for a market structure shift. Even a very, very minor one means a lot. Okay, let me take a look. Price actually swung significantly to a top before it broke structure right there. So we actually have a market structure shift right there. So even on the 1 minute time frame, this one is quite a significant structure. It takes quite a bit of practice before you can start to spot all these kind of structures taking place. Okay, let's move on. Okay, let me just draw it out nicely, very, very clear for you guys to see. So this is how I actually see it. Okay, let me find a nice place to put it. All right. So same thing, we have a market structure shift here. So I'll just put an X right there, bottom right, make it bold. So you guys can actually see it very, very clearly. Same thing, I'm looking for the 38.2% retracement. So I'll be drawing the Fibonacci line from the top to the bottom, swing low. So I'll be drawing every time price, every time price increases, I'll just be adding my entry right there. So notice the 38.2% area, that would be my entry. So I'll be entering right there. So the moment price steps in, stop loss above at the previous swing high. Take profit target, your first take profit target can be the negative 27.2% Fibonacci line. Same thing, this is your first take profit target. Your next take profit target is the negative 61.8% Fibonacci line. This is the negative, this is the final TP target that you guys can take a look at. Okay, so I'll just screenshot this down and send it to the chat. Okay, maybe I should label this out. This is a very, very nice classic resistance area. Okay, I'll just screenshot this down. Okay, I'll just screenshot this down nicely and send it to the chat. So this is another example on the use of Fibonacci expansion lines for your take profit targets. All right, any questions so far? Feel free to let me know. So I'm always aiming for the 38.2%. Any questions, just let me know in the chat. I'll slow down. If you guys have any questions, just let me know. Okay, let me take a look at this setup right there. Okay. Let me find another setup. So I haven't found an extension setup yet. Let me find it. Okay, so we actually have an extension setup. Let me find it. Okay, let's move back. Let me just move back to that setup. Just now I had it right there. Okay, where is that setup? Okay, it's okay. Okay, just now I show you guys this setup. I already showed you guys just now. So we had a market structure shift here. Price actually entered with an X right there. Price came back down. tapping into the 38.2% area, but I told you guys you can expand your entry to 50% area. So how do we use the extension, Fibonacci extension line now? Can actually draw the fib from the bottom of the swing low to the next high. Draw it out. Hey, wait, my bad. Draw it out from here to here, the top to the bottom, where price last hits, and then you start to draw the 127 and 161.8% area. So these plus sides are actually the positive numbers are actually the Fibonacci extension areas. So if we actually add, so maybe you can add some confluence, negative 27.2 and negative 61.8. These are quite far apart. Well, you can actually use the extensions for your take profit targets also. So if you actually found another long entry, let's say you found another long entry, let me find one. Price goes down, retraces back into the 61.8%. So let's say you actually caught some kind of entry. So this is an unrealistic setup right there. So let's say you actually caught an entry right here, 61.8%, stop loss below, can aim for the 127.2% Fibonacci extension line, or the 161.8% Fibonacci extension line. Okay, I'll just screenshot this down and I'll send it to the chat. Copy link to chart image, send it over. So yeah, any questions so far? I think you guys have no questions. You guys have no questions. You guys are just understanding, watching, slowly understanding what is going on. All right. So let me find the Linktree link. Linktree.me/. So you guys want to contact me. You guys want to, let me find it. It is actually my personal account. You guys can actually follow me. This is my personal Instagram account. You guys can follow me. My account is not private. Feel free to follow me and ask me, talk to me there if you guys want to. So you guys can find out more about me via this Linktree. So I'll send the link over to the chat. You guys can click on it. It will expand out. It's like my portfolio easily it's like my portfolio, label it out nicely for you guys to take a look. All right. So far, any questions before I end this webinar? Just let me know. So I know this might not be the easiest of topics, especially for beginners. Many traders actually did not use the Fibonacci lines when they start trading. So please do not make the same mistake. So let me just take a look at EU. So I'm honestly looking to, just sharing a bit, I'm actually looking to continue selling EU, possibly selling EU just because there's this nice little support area that I'm looking for price to head towards. So it's actually a nice area on the 1 hour chart that I'm looking for price to hit. So you actually notice that there's a trend line. So we actually have 1 tap, 2 taps, 3 taps, 4 taps, 5 taps. So if price actually manages to come back down towards this area, I'm looking for retest before price hits back down. So this could be a potential setup that I'm actually looking at currently for euro dollar. Potential trade setup for euro USD. Okay. So currently, if there are no further questions, I'll be ending this webinar for today. So yeah, thank you guys for joining. Appreciate it. I'll see you guys in the next webinar. So yeah, thank you Phoebe, thank you Jana, thank you Juha, thank you OK Chuk U, thank you Samuel Julian, thank you Tivin. So yeah, thank you everyone for joining. Feel free to talk to me within the, where is it? The VIP trading room. Just ask me any questions there. Let me know. Hey, no problem, no problem. See you guys again. Hey, bye Jana, bye Tivin, bye Joha. Bye guys, take care. Safe trading. All right. Hey, bye guys, bye guys. I'll just end it right here.